Afternoon, everyone. It's an absolute pleasure to have you here. My name is Pavlo Petidis. I am a co-founder of Aurik. I've written, Dave, a couple of books. And let me tell you, it's not easy writing books. You really have to organize your thoughts. I've written a couple of books. I've invested in a few businesses. And it's my absolute pleasure to be hosting and seeing you all this afternoon. Thank you so much for making the time to be here. I would so appreciate if we could switch our cameras on and make this a really human engagement. Rocco, it's been a couple of years since I last saw you, and I'm so pleased to see that you have emerged out of retirement after a very successful exit in your last business, and you're back in the saddle. Really good to see that. David, it's an absolute pleasure to have you. Amelia, Liana, so nice to see you. John, I've heard really interesting things about you. I believe you have been cracking the whip and making some really good progress. And Vanessa, I am fascinated by what you've managed to achieve in your business. I spent some time on your website. Really, what you've done across Illinois and Wisconsin, it's a real achievement. So well done, fantastic. The journey's beginning, I hope. And with that, I'm going to get straight into it. Johan, Mornay, very nice to see you. Mark, nice to see you as well. Sandy, it would be great if you'd switch your camera on. And Raymond, I have not seen you for, I think, probably about a year and a half now. It's been some time. And no doubt with COVID, everything slowed down, including travels everywhere. To make good use of time, because time is money. I'm going to share an agenda with you. I'm going to talk very briefly about origin. Who are we? What do we do? Why do we do what we do? How do we land up doing what we do? How can we be of value to anyone in business, in the business ownership space? An analogy. I'm going to be sharing an analogy with you because analogies are very helpful to create some perspective and to look at your business from a different perspective altogether with a very simple, fresh set of eyes. And then finally, I'm going to be sharing a single system, a single scalable system to build your business into what we refer to as an asset of value, because I think we need to stretch into some new territories. Vanessa, I don't know which ones are next, which states are next, but I could feel by simply looking at the website that this journey is only half beginning with you, and there's still some road to travel.
2 states are enough. I'll stick with the 2 states, additional locations.
2 states are enough. Well, let's get them simplified. And if they are simplified and you can spend less time in operations, maybe another 2 states should be added to the portfolio, let's say. Okay, so the origin story. I was born to a family of entrepreneurs, business owners, like many people, I suppose, were. Greg, really nice to have you with us. I've been so keen to meet you. My understanding from a conversation I had recently is that you and I share something in common, Greg. You were called a business geek, and I could so identify with that and relate to that as a business geek to a business geek. So no doubt we'll find time to have a really good conversation. Nevertheless, I was born to 2 entrepreneurs, or 3 entrepreneurs, my father and 2 uncles. They were folks that had to be in business. They started their own businesses, and they did everything right. They stuck to their knitting. They stuck to their guns. They spent 35, 45, 50 years building a single business in a single industry. They were good to their teams. They were good to their suppliers. They were good to their customers. They did everything right. They joined trade associations to try and improve the conditions of trade within their industries. They brought on many youngsters into the industry to try and create a pool of talent and feed the future of the industry itself. The one uncle worked until he was 88, 89. The other until he was 84, 85. And not because they wanted to, Vincent, they worked that long because they had to. They needed the income to continue and maintain the lifestyle. My father had a very different outcome. He managed to exit his business at the age of 74 after an intervention. And it got me thinking about how did 3 people who were smart, who were fortunate in terms of education, hardworking, who did everything right, land up in that position. Nevertheless, I then started my life after schooling had finished by thinking I was really, really clever, and I acquired two businesses. I bought them each for $1. The first business had undisclosed debts, Sandy, of $420,000. I got the shock of my life after I realized what I had done. Nevertheless, 5 years later, through quite a bit of sweat and grind, that business, touch wood, was successfully sold. I then acquired another business from a married couple who were the founders of the business for $1, and this business had about $360,000 of debt, which I was aware of. What was interesting in both cases is those businesses were acquired by people very similar to my uncles. They were individuals who'd been in the game for a long time and in their businesses for a long time. They had done well and generated good income, and yet their businesses were valued at $1 a piece, along with the debt, of course. After that, I spent some time in mergers and acquisitions and found myself in an unenviable position where I had more businesses on my books available for sale than there were buyers interested in acquiring them. And I learned that a number of those businesses were in the hands of individuals who had overly estimated the value of their businesses, had built their businesses in such a way that the businesses upon exit would not yield a decent return for the investors or acquirers. From there, I got hauled into a family business, a devastating set of circumstances. You know, when you've crafted your own career and you're on your way, and the man who raised you and housed you and fed you and educated you and put food on the table offers a phone call and says, hey, listen, I need some help. And all of a sudden you realize that the lifestyle your father had afforded you was generated through more blood and sweat than through a business itself that could function and operate without him. So there was an intervention in the family business, and I got extensive exposure to the challenges of succession. Luckily, we sold that business 3.5 years later, and I burnt out a little at that stage. So I've spent some time on the West Coast, consulting to businesses, raising capital for businesses, and gathering information and data and stats and more data. And to my horror, I discovered that 94.6% of businesses started in the US failed to sell, despite the fact that they might well have earned their owners really good incomes. And I realized then this was not a genetic condition. This was a statistical challenge. At the same time, I took on a crazy job for a leading university to mark company valuations as an external examiner. And after marking close on around 350 valuations, I started to understand the dynamics and the levers that create value from an acquire and sell perspective. In other words, beyond income, how do you craft value in equity? How do you estimate and calculate capital value? And how do you build a business to generate capital value? Just a quick pause here, 94.6%. Now, I've worked with some really smart people. The stats are against us. And if being smart, working hard, doing everything right is not enough, what is it that needs to be done to be on the other side of this statistic? I thought that that was a really good problem to solve, and that's when Aurik began. The way we started in order to solve it is over a 9-year period, we started, built, and sold 12 businesses. The most interesting outcome of those businesses, despite the fact that we had 2 failures, we had 2 IPOs, we had 3 buyouts by management teams and 5 exits to corporate entities, was the fact that the last handful took half the time and just under a third of the capital to build to the same value as the first handful. And having an engineering finance background, one of my co-founders has a legal finance background, we started to look really carefully at what we had done from business 1 to business 12. And through that, we identified 207 activities, physical, practical activities that when put into a sequence, yielded the efficiencies we enjoyed in the last handful of businesses. Subsequently, since then, we've offered this as a service to now close on 2,900 businesses, typically all doing between $1 and $50 million a year of annual revenues. The average compound growth rate that we've managed to maintain and achieve across that portfolio of businesses that we work with is running at 28.9%. Effectively, the business doubles up every 30, 34 months, right? The EBITDA growth, the profit growth, sits at 32.4%, and the client rating of the experience that we provided those business owners and their teams is running at 97.4%. It felt as if we were on the path to cracking the code of business growth. In order to do so, we had to solve 9 impediments that all of us would have experienced from time to time. 3 of them found are in leadership. How do you maintain relevance of your business in a highly contested environment? And Vanessa, you would know about that because honestly, seeking talent, finding talent, placing talent is highly contested. There are thousands upon thousands of competitors. How do you maintain relevance in a changing, noisy environment? Time. How do we find time to lead rather than time to do and operate? Without a doubt, it seems to be the single biggest challenge that we certainly face with business owners that we work with and speak to. Control. Every time I let go of control to focus on leading, I suddenly realize I'm at risk and therefore find myself doing again. Control and delegation remain a perpetual problem. It's especially true the moment you open multi-location branches and stores and points of presence. It's especially true as you grow your team, and you grow layers in your team. 3 challenges in leadership that we had to solve. Operationally, finding, winning, and holding customers has become increasingly more difficult. 15 years ago, you would craft a great Google ad. You post an ad on Facebook, on LinkedIn. Instagram was still in its early stages, and it would light. Bang, you would be in business. Today, that seldom happens. Those platforms have largely become corporate-facing. It's pay to play, and wow, do you have to pay to get some sort of play? It's become harder and harder to find customers, win them over, and hold them. Operationally, there's nothing worse than growing only to discover that as you grow, you're creating chaos, and that chaos erodes the profitability in your business. It takes you out of a leadership role back into a doing and driving role. And then finally, team. To find the right people to do the right thing at the right time, every time, remains arguably one of the biggest challenges we all face. And yet this is in a world where people have never been better educated and more skilled. And then we have challenges that we've identified that exist mostly at the end of a journey. We spend 10, 15, 20, 30 years, 40 years building a business, generating a good income. And on average, people spend between 30 and 80 hours exiting that business in the hope of a successful exit and capital gain. And only then do you realize that growth in revenue alone does not support that exit. It harms it. So how do you grow both revenue and profit? Many people realize, in fact, that what they have done is built a job. They are the central cause, reason for that business to function and operate, as opposed to an asset, something tradable and sellable. And then wealth. How do we monetize 10, 20, 30, 40 years of sweat, investment, stresses and strains, the many risks we've taken? How do we monetize it into a capital gain that adds to the income we've earned from that business to turn our businesses into wealth-generating assets? 9 impediments to getting to the other side of that 94.6%. That's what we had to solve. Before I tell you how, I want to share an analogy. Vincent, you and I have a shared history. Yours is far more senior, far deeper, and far more impactful than mine. And that is that I too spent some time in the Navy. As a youngster, not knowing what to do, with parents who didn't know how to direct me, they placed me in the Navy, and I spent about 3.5 years in the Navy, working on patrol vessels. And I learned a lot about ships. And in learning about ships, I learned a lot about the commonality, Vince, between sailing a ship and building a business. The first thing I learned is that every ship has a hull that is designed to fulfill a particular function. Now, I know you were a commander. I'm not sure what ships you served on. But this ship that I served on was really about speed. We really would not go beyond 200 miles out. It was about speed. It was about agility, moving quickly, moving fast. Another hull might be designed to move ore or oil. Other ships, which we haven't seen for some time, are designed to move people for pleasure and leisure. But every ship is built to have a particular function and a particular reason. The next thing is, every ship, when it leaves its port, has a destination. It knows where it's going to. If you can determine where you're going to, and you know you need 10 days of food, fuel, and water to get there, the smart captain resources that ship with 15 days of food, fuel, and water, because things happen out at sea. Weather conditions change. Things go wrong. If you don't know your destination, you can't navigate a path there. Every ship is operated and run and managed and functioning because of two things. Crews who've got very well-defined positions determined by very well-defined sets of systems. What used to give me enormous comfort when weather turns sour was knowing full well that every member of that crew knew exactly what to do, when to do, and how to do it based on the system sets that they operated, that they were capacitated on, and that kept us safe. The engine sits below the decks, below the plinth line very often. It acts as a ballast. And those diesel engines have one function: to turn the screw. The propeller is what gives you propulsion. The bridge up at the top over there was wonderful. Now, I shouldn't say this to a senior commander, but on our bridge, we had an espresso machine. It was far better than being in any engine room, I can promise you. We had instruments. We could navigate our way. We could see what was working, what was not. We could bark orders at the crew. Most importantly, we could determine the direction we were sailing in as a result of the propulsion from the engines. So hold on to this analogy, because it's a powerful analogy, which I'm going to unfold as we talk about a simple, scalable system to build a business into an asset of value. One single system. Simplicity is scalable. And I was reading a lot about scale, Greg, in the note that you left me when you registered. Without simplicity, scalability becomes almost impossible. Of course, it needs to start off with us as the captains of our own ship. Why do we do what we do? And that why cannot afford to change, because it takes many, many hours and many, many steps to build momentum towards the end destination. Where are we going and why do we do it? And I want to quickly talk about an asset, something we should all be familiar with, and I'm sure we are. An asset really has three features. Imagine you buy a share on a stock exchange. You buy it for $100. You're expecting three things from it. The first thing you want is income growth. So mark your share, hopefully over 5 years, will yield $20 of dividends year on year on year. That's income growth. In our businesses, We earn salaries, we earn dividends, we earn bonuses. That's our income. The next thing you want is capital growth. Hopefully, after 5 years, you can sell it for $200 or $300. That difference between the sell price and the buy price, the $200, is your capital gain. In our businesses, most of us are working to achieve and attain a capital gain. And none of this would be possible if you never had a ready buyer. So the ability to trade that business, or rather that share, is what gives you that capital growth. So just hold those 3 ideas in your mind. Because from an Aurik point of view, we fundamentally believe that all of us as business owners should be sailing to only one destination, what we refer to as an asset of value business. And I'm going to unpack this for you in the next couple of minutes. It has 5 layers. It's a business that's well positioned, operated by a system of delivery, brought to life by team members, that lets you focus on next level growth. Another 2 states, Vanessa, in order to deepen value so you can exit with a bang. So how do we achieve it? If we know that that is our why, if all of us simplify and focus on saying we are doing what we're doing in order to build an asset of value, that is the single destination we are sailing to. How do we get it done? If I look at that simple, single system of how to achieve it, something that will make the why happen reliably and faster, there are 3 components to it. The first component is about making sure the how we have built for our businesses is fit for purpose. It needs to suit the function of the business, and it needs to take us safely to that destination. The how looks slightly different, Greg, in technology businesses than it would in human capital businesses, Vanessa. It looks slightly different in the insurance sector. They're very different. The next thing we need to get right is we need to get that engine working, largely independently of us. And that's all about creating organic growth. The growth that can happen largely independently of us on a consistent, reliable basis, giving us a 5, 6, 10, 12, 15, 18% year on year on year compound growth, where you are not the central cause of that growth. And then finally, getting from the engine room into the bridge, we then talk about how you get next level growth. And this sequence holds true because a single system is made up of many distinct, discrete parts that compound together, integrate together to create an exponential whole. So positioning, the first layer of an asset of value, the first layer of an asset of value. And Vince, I know, warships nowadays are not nearly as glamorous as they were in the 1700s. In the 1700s, perhaps you never had the weaponry or the capability to really make an impact. So what people used to do is they used to craft figureheads. This particular figurehead that you're seeing over here is off the quay of Kalmar. And Kalmar was a boat built by the Dutch that took the first Swedish settlers to the United States in the mid-1600s. So the captain of the ship knew it was a treacherous journey and knew that most people had never, ever sailed on ships before. And this particular captain thought that a lion represented an image of being bold and being brave. So well suited to its purpose and function, well suited to attracting the patrons that they certainly attracted. Positioning is all about what makes your business special in the eyes of your customer. And Greg, as a business geek, I'm taking on a bit of a journey because in 1774, Ralph Waldo Emerson turned around and said, if you build a better mousetrap, the world will beat a path to your door. In effect, he was saying that if you built a great product, you'd be in business. And in 1774, he was right because there were so few products about. And everyone then started to build products. We then hit the Industrial Revolution. Products escalated at scale. There were products everywhere. And the next big issue that won business over was price. And in 1922, out of Detroit, Michigan, Who said you can have any Model T Ford you want for so long as it was pink? Or was it black? And the assembly line was designed by Henry Ford in order to drop price and compete with the horse. So you needed a good product and you needed a good price to win business. And then not so long ago, still alive today, still as remarkable as he was in the very early 60s, Philip Kotler, often seen as the father of the advertising sector, turned on his head. Winning business is all about understanding the segment you serve. He said birds of a feather flock together. And simply having a good product with a good price was not enough. You need to know where your customers are so you can find and engage them. That's what we were taught. And that's what we still get taught today. And yet over the last 7, 8, 9, 10 years, we've noticed that none of those are good enough to distinguish your business and stand apart. And what we've noticed is that within the segment that you identify serving, the circumstances of players in that segment matter more. What wins customer attention today is a business that is positioned to solve a problem through a remarkable experience. The problem is solved by your product or service, and the experience is solved by how you market to that audience, how you engage them in a selling format, and then how you service and deliver to them the functions of a business. Positioning is essential. And because of the world that we compete in, which is so overcrowded and so noisy, the extent to which we define our business as who we serve in relation to the problem we solve and the experience we offer them, that is the point of distinction against which we build the hull of our business. I want to share a story with you with the watch retailer, a client that we worked with for 3 years, straight after 2008. The credit crunch completely destroyed their business. Second generation watch retailer. The current owner was 52 years of age at the time, 44 years of established, and they had multi-location stores. He argued that revenues had slowed because they were in the luxury product industry. And we said, but there is no such thing as a luxury product. After doing some work with them in the next 3 months, we discovered very quickly that the business needed to be repositioned as a problem-solving business for 4 particular problem sets. Number 1, there were collectors, and collectors of a particular brand or a particular sequence of watches were absolutely resistant to any credit pressures. They would sell their homes, their spouses, their children to get the next watch in a sequence. Their children, Vanessa, they would sell their children to get the next watch in a sequence because they knew that if they maintained the sequence of a particular brand in a particular collection, its value was enormous. We then had those that were looking for exportable wealth, the ability to acquire a set number of watches, put them on your wrist, and simply visit another location, place, or country, allowed for that watch to be instantly sold on arrival, and was a very effective way of transferring wealth. There was a third crowd that emerged through no fault of yours or ours, and that was money launderers. People who'd made money in a strange way, that needed to wash the money, would acquire a watch today, auction it tomorrow, and through that, wash money. And then there was a small collection, I think a larger collection than any of us anticipate, of folks who need to wear watches in order to say they've arrived. 4 distinct problem sets that one would never have thought expensive luxury watches solved. In understanding that, the business then grew at a compounded annual revenue rate of 24.8% year on year for the 3 years that we worked with them thereafter. By simply understanding positioning differently, not relying on the fantastic brands that they have, the products that they have, but by understanding what problem they solved and for who, allowed them to attract the right people at the right time to get those deals done and support that growth. Positioning matters. With that in place, we fundamentally believe that the experience is created by all the commercial systems. Marketing is one function to generate leads. Sales, one function to convert leads. Operations, one function, to service leads. Administration, one function, to manage leads. And every single set of systems, commercial systems, has 6 elements to it. Activities placed into a sequence that give a measured outcome, that importantly can be captured in a job description and taught, and can attract the right level of remuneration for performance. See, Vince, does that not sound like looking at the list of crew members, understanding where they're located on the ship, and looking at their checklists? It's exactly the same. Because once we have those systems in marketing, in sales, in operations, in administration, this is the impact. Imagine each of them to be a cog, a gear, optimized in its own right, integrated and coordinated with the other gears. When they work in that sequence, they enable your positioning in the market. Activities in a sequence with a measured outcome that can be taught with remuneration and training to back it. A system of delivery is what creates that predictable, reliable, consistent experience. And it gets brought to life by having a purposeful team. When you say, how do I get the right people to do the right thing at the right time? From an Aurik perspective, in an asset of value, we argue the system gets that done for you. It's by easier. Vanessa, it's by easier than rather looking at a CV with skills and characteristics and accolades and a history of work that would make me think Steve could build the base station on Mars alone. It's far easier for me as a business owner to evaluate Steve against a set of activities that make up the system for which I'm looking for him to lead, operate, empower, and run. And it puts the business owner in a position where I think you can dramatically improve your recruitment, but more importantly, you can delegate effectively. If those activities that make up the system set are simple and sequential, and they are backed by the training, it puts you in a position where you can very quickly evaluate Amelia, get her on board, capacitate her to operate and run and lead that system, and let her get on with it. And we've noticed something really interesting. When somebody operates a system that they're well suited to, be it in marketing or sales or ops or admin or procurement or any one of the other functions, and they're well suited to it, they perform. And as people perform well at the function that they're on board to deliver, they blossom and they thrive. Confidence builds. And with that, leadership takes place. And it's funny, when you do well at something, you spend more time doing it. And when you spend more time doing things, you see better ways of doing it. In an asset of value, people power a system of delivery that helps you attain a consistent positioning in an overcrowded, noisy place. I want to share a story of a business that we work with. This particular business owner, 46 years of age, 14 years in the construction sector. It's a nightmare of a sector. You go through all these boom-bust cycles from one job to the next job to the next job. And there's scope creep every time. And the supply chain is a nightmare. And getting the right team on board is a constant challenge. After doing some work with this individual who had worn himself down to the bone, he had decided that he was going to niche himself in a highly specialized position. And that was he would focus only on refurbishing and upgrading basements. And taking it one step further, he would focus only on sports-themed basements. The result of this is that he understood where to find the most likely buyers of sports-themed basements. Because through all the sports clubs, through sports fans, through member sites, through all the stores that sell memorabilia, on the online stores that sell memorabilia, he knew exactly where his audience was. He understood the supply chain and procurement chain that he needed to get this job done. He understood that he was going into people's homes while they still lived and functioned there. And he understood that he needed to get this done at a standard that would meet their requirements in a super short cycle. And as he went from one instance to the next, he built his show reel or portfolio. And sports fans generally invite their friends over to watch the sports games. And every time friends came over and entered into that basement, they said, "Hey, Johan, who did your basement?" Very unusual for a construction firm to grow from $2.8 million to $4.2 million in a short period of time, but more interestingly, to create a massive separation, almost 10% in the profit growth rates. I want to pause for a moment, because what we've done now is we've identified positioning, and we're clear on why our businesses exist, why they matter, what makes them special. In order to make that happen, we created a system of delivery empowered by a team, and that gives two outcomes. You can almost see this as a formula. The outcomes it gives you are that of organic growth in time. If you think about it, organic growth is reliable, consistent growth that happens year on year on year, largely without you. This is what gives you propulsion. This system set of systems and team allow you to migrate from the engine room onto the bridge. It's what takes what you're building from being a job into an asset. Because if you can find 70 to 80% of your time on the bridge, with only 20 to 30% of your time in the engine room, mentoring, motivating, guiding a team to keep the propellers turning, from the bridge, you can then focus your attention on growth, next level growth, growth beyond organic growth rates. And that next level growth has one function to it. The ideal strategy for next level growth is growth that will significantly lift your revenue growth rates, only see a moderate increase in your operating and service costs, and widen the gap between the two to create a rapid growth in profitability. It's not that hard. What's absolutely crucial to this is that your positioning cannot change. The positioning statement that you defined for your business needs to remain the same. So if you're bringing new products on, if you're going into new markets, that should be led and determined by the statement. Positioning needs to remain the same. It's what your brand is accustomed to in the eyes of competitors and in the eyes of customers. It must also not see fundamental changes in the system of delivery. And it must also not create chaos in your team, stretching them into a completely new set of activities, skills, and operating procedures. Because growth that does that will certainly lift your revenues, but your costs too will rise. And that yawn that you so desperately need to create an asset of value won't emerge. I have met a number of business owners that said to me, "I'm growing, I'm fine, I don't want to grow harder, I don't want to grow further." And when you inquire why, and you look hard and deep to see why, every time they've grown in a manner where costs have grown too, and chaos has emerged, and complexity and risk have crept in. Accelerated growth in an asset of value can only be responsibly, if I may say, brought on board if your positioning is maintained and your system of delivery and team aren't disrupted too intensely. With next level growth in play, it normally brings a fresh flush of cash into the business. And the focus over there is for us as captains of our ships, as the leaders of our businesses, to ensure that our positioning remains relevant by speaking to the top tier customers we serve and looking for that innovation that will distinguish and set our businesses apart further, making customers reliant on us rather than desirous of simply using us. The best way for me to explain that is to share one last study with you. A baker we worked with who was 55 years of age, started his bakery at the age of 28, so a 31-year established business. He was integrated across the baking industry. He'd come to see me at that stage, arguing, complaining that his business was simply not sellable. It had been on the market for 2 years. His growth had slowed. What he had loved doing, which was baking, had turned into a slog and a drive every day. But he could not get, Dave, what he thought that business was worth. And when I said to him, well, what do you think the business is worth? The number he gave me had no relationship to the mathematics of valuation. So we went through quite a process. This was a 4-year program of action. We went through quite a process. We repositioned the business away from all the diversified opportunities he had identified before to become a 365-day reliable on-boarder of fresh baked goods, classically into the hotel sector. Hotels need to serve continental breakfasts. They wanted to outsource that. It happens 365 days a year, perhaps not as much as it used to, but that's all coming back now with COVID waning. And in that instance, that focus led to him understanding that you don't only sell to the food and beverage manager, because in these corporate hospitality groups, decisions are based by committee, which included finance that had different requirements, besides a fantastic croissant. It included procurement, which had a whole lot of safety and health occupational issues. It included human capital and resourcing, where onboarding product needed to be done simply and seamlessly. In getting that right and understanding that positioning, a system of delivery was built, the team was empowered to run it, and he found himself 30% in the engine room and 70% of the time on the bridge. In seeking the next opportunity for growth, he eventually found it 6 months later in the supermarket environment, where morning shoppers wanted fresh baked goods for breakfast. And those stores, which operate for 365 days a year, need to secure their morning trade. And instead of baking their own goods, they acquired their goods from him. And where the bakery once existed, they turned it into retail shelving to generate additional income for themselves. Very similar proposition, very similar problem set, very similar experience between the hotel groups and the supermarkets. So bringing that new market on board saw a massive lift in revenues, a moderate lift in operating overheads, and a huge jump in profitability. When we met, the business was valued at around $1.7 million. And now 12 years on, as it's approaching close on $50 million a year, the valuations are running at around $84 million. 55 years of age. I suppose Ray Kroc really started at 52 or 53. Maybe it's not too late for some of us. So let's go back to the future tomorrow. Here we are. The business is built. We're up and running. We're cooking on gas. And we're looking to exit. The time has come. The stats are against us. 5.4% succeed. Succession in business is even worse. So let's talk about the buying process. Vanessa, I knock on your door to buy your business. To get this done right, I'm asking 5 questions. The first question is, what makes you special? What sets you apart? And to the extent that you can tell me who you serve, what problem you solve for them, and most importantly, what experience they want, and demonstrate to me that your business is expert at occupying and dominating in that niche, then you get a tick for special. My next question I ask you is, how does it work? To the extent that you can show me a system of delivery that delivers on that positioning, tick number 2 comes. Then I say, but without you there, who makes it happen? And to the extent that you can show me a team that when I leave as captain of that particular ship and a new captain arrives, it will continue to function as it's meant to, you get a third tick. If you can show me where the next opportunity of growth comes from, and in that it will widen the yawn between profit and revenue, you get the almost final tick. And then in my final argument to you to get your valuation down, I do a deep dive to understand that without you there, what would happen? And to the extent that you can show me that you are not the proximate cause of that business, an average 2 EBITDA valuation emerges at around the 7-8 EBITDA valuation. This is the formula that we are never taught or consider in doing what we do every day to generate our income. These 5 levers should be baked into our businesses today for that event tomorrow. To the extent that we can't answer these, a 2 average EBITDA valuation emerges to a place or a space where I see you at the age of 22 knock on your door to acquire, yes, your debt, but to pay you $1 for the business. And with that, I want to close out. My ask of you is, what is your final destination? Is it clearly defined? And do you have a simple plan to get there with certainty and clarity? How much time do you have? And are you spending your time doing it or leading it? And do you have a system to get to that destination in a shorter, more efficient process? To the extent that you don't, let's partner with you to get there. We only work with clients where we know we can deliver that. And the reason we only work with clients where we know we can deliver that is because over 70% of our fees are linked to growth. And that makes us true partners, not just service providers. And with that, I want to close off with 1 or 2 statements. Your job is to build the system that makes the business happen, not you making the business happen. Your purpose is to lead your business through structured sequential growth cycles, 3-4 stages of next level growth, and your success is an asset of value. I'm going to end up over there and move out of presentation mode because I would love to have a discussion around some of the issues raised over here and to tackle some questions that you may have front of mind.
Pablo, a quick question from me, just to expand. How many people in the Aurik experience have realized that they have created a job and not an asset of value? And how confronting is that for the individual when they realize that they no longer have the time to fix that problem? And how does Aurik overcome that and handhold the person through that process?
It's, Steve, building a business, as all of us on screen know, it takes a tremendous amount of effort, energy, and focus. And if you look at how we mostly start our businesses, undercapitalized. And that means we chase every single deal that possibly comes across the table. And we do so in order to get revenues going and to get cash flow going. And over a period of time, it develops a very particular muscle memory in the mind of the business owner. You start to believe that saying yes to everything is important to keep the wolves away from the door. And that muscle memory doesn't fade for a long, long time. So that's the first challenge we have to overcome. That by learning to say no is the starting point of building a saleable asset, not something that will be centered around you saying yes all the time. The second thing is most of us build a business based on either a relationship or on our technical capabilities. So we think and feel and believe that the way we crafted our service or the products that we offer really make the business happen. And in actual fact, for that to be so, it means that you need to be leading that all the time. And if you're leading that all the time, it means that you are the proximate cause of that income growth in the business. And that is a bitter pill to swallow. That's mostly only felt at a time when I'm ready to exit. And I learn, much like the baker, that I cannot fetch the price that I deserve or feel I need or have to achieve for my business. So the process we go through in order to moderate that and reset the business for sale and exit is working alone with the business owner is almost impossible. You have to bring your team on board. You know, if you get a consultant on board, a consultant will identify and research ways for you to get something done and give you a document, and it's your job to apply that document and to sell it to your leadership team. You then have to sell it to their underlying teams. If you get an advisor will give you a direction, and then you have to implement it. In the way that we then work with you in order to re-energize the business and reorientate it to make it a saleable asset as opposed to a job, is we work with the entire team. Because if we build systems with teams, it means that you get the best insights from those members of your team at the coalface of everyday activity. Plus, at the same time, their voice is heard, their hands are felt, their ideas are shared. And it means that the best system is built for which they take ownership on and become accountable to implement and run and lead. And it is the single shortest route to take a good business that's generated good income for you and bake in those 5 levers of value and exit so you can get the business sold 2-3 years down the line.
So Pavlo, thank you for the presentation. It was very informative, and for all the nautical analogies, I can appreciate that. You make it sound so great, time at sea. There was, you at least probably had alcohol on your ships. We didn't have alcohol on U.S. Navy ships. So in addition to having an espresso maker, we didn't have that, nor did we have any alcohol. But anyway, we survived. You know, for a lot of businesses that we see, what do you think is the hardest? All those areas work well together. Where do people challenge? Where are they challenged, I should say, to start? And where are some of the areas that are the hardest to tackle versus the easier ones? Because all of it's important, but sometimes some of the areas, like you mentioned, positioning, building team, et cetera, what are the harder ones to address? And what are some of the ones that tend to go quicker? I know it's probably business dependent and, you know, market dependent, et cetera, but is there some commonalities or themes that go across that?
That's in my experience, the hardest thing to get right is positioning. Because it means saying no. It means saying no. And any business owner out there is nervous of cash flow. Any business out there is nervous of maintaining growth rates. But to the extent that you learn to say no, because you have taken your segment and understood the circumstances that clients and customers within that segment endure, and have become expert at identifying those circumstances and selling only into those circumstances with a problem experience statement, defining your business along those lines, almost niching within a niche, I think is the hardest thing to get right. And then once you've got that right, building out the systems to deliver that is a grind, but it's a job of work that can be done effectively. And it solves the second biggest challenge that I've certainly noticed, and that's the ability to delegate effectively in a situation that puts you in a position where you can genuinely be on the bridge predominantly. So first will be positioning. The second then would be to get a purposeful team, the right people to do the right thing at the right time. And then the third element is, you know, when it comes to next level growth, it's not about you. At that stage, your business really should be public property. And you should be going to your customers and clients to understand where the next level growth lies. Not that innovation that you've got percolating away in the back of your head, or not that special project that you would love to deploy. It takes an enormous amount of discipline in order not to disrupt your organic growth rates and base when you're looking for that next big jump. So I'd say those 3 elements are the single biggest challenges we tackle well with our clients.
Thank you. Appreciate that.
Hi, I have a quick question. How have you overcome businesses who, really, I find a lot of businesses feel that they can't, or I feel they don't see the forest through the trees type of a deal.
Yeah.
Do you think that they're walking around in I don't want to say in an arrogance or an oblivion or something to that effect to get them to be motivated to say, hey, you know what, I do need to do this without, because I mean, some consulting, it almost comes, and this is kind of consulting, kind of comes with a negative, like, oh, they're going to come in and tell me how to do my business. I know how to do my business, that type of thing.
Now, Dave, that's always evident from the website, to be honest with you. When I look at 99% of websites, what are they showing as their window to the world? They show the product or service first. And then when you look at clients, you normally see 30, 40 different sectors or industries. And that to me is the business that's trying to be everything to everyone. And I think when you're trying to be everything to everyone, if I look at the baking business, that baking business, what Jack had done, which was right in the beginning, because he started that business in an undercapitalized manner. And he was deeply and profoundly committed to the baking sector. He was making fresh baked goods for hotels. He had secured the rights to the McAdams baking system, a Dutch-based franchise that allows you to bring baking systems into hotels, into restaurants, into the food services sector that you and I could tomorrow acquire and get a bakery up and running. He was bulk buying flour and break bulking it and supplying it to the smaller bakeries around him. And he had 3 or 4 coffee bakery shops. Now, if you look at that, every single one of those addresses a completely different customer group who all have a different set of problems and all want very different experiences. And when we met this guy, he turned around and he said, baking was always in my blood. I loved what I did. But he said it has turned into a slog every day. He was describing a life of being in an engine room, not diesel engines, but steam engines hauling coal. And I've got to tell you that by far, most business owners we work with are there, despite the fact that they've built businesses that have afforded them a very good lifestyle and a very good income. So we see that far more often than what's anticipated, far more often. I'm hoping I've addressed most of what we have. I know that we're tight on time. I've taken up an hour. I stretched an extra 10 minutes. I hope you got value from it. Vanessa, you've been very quiet. I'm still looking at Michigan saying, well, that's the closest next opportunity, surely, with everything you've built. I mean, why hold back?
I think Iowa's closer to where I'm at and maybe a little bit more business friendly.
Well, thank you folks very much for joining me. I really appreciate you giving up the time. I hope to meet you in the very near future. And with that, I bid you a fantastic day ahead, or rather, an entrepreneurial day ahead. And we'll see you on the other side. Take care, everyone.